In this video, I'm going to walk you through what liquidity is and how you can use it to your advantage. So before we get right in, please do to like, subscribe, turn on the bell icon. Liquidity simply refers to money in the market, yet. And if you don't know what liquidity is and how to define liquidity, you can become the liquidity, you can get liquidated. So just like I said, liquidity simply refers to money in the market, and it is found equals area of equal highs or equal lows where the liquidity is found. I'm going to explain it very clearly so that you can understand, but don't know that liquidity is found in areas of equal highs, equal low. Yet liquidity is used in pushing orders, large orders. If financial institution wants to trade, usually trades with large some amount of money and generally needs other people's money, let me put it that way, so that their orders can go through. Get. So I don't want to bore you with the theory yet. So what I'll be doing right now is opening the chart so that I can quickly show you what liquidity looks like and how you can identify them. Get. So just like I said, liquidity is found in areas of equal highs and equal lows. There's no type of liquidity. So if, for example, this is in a trade and you see market is consolidated yet. So at this very top, at this top right here, there is liquidity here, and at this top and below right here, there is no liquidity in this particular place. So you're going to mean that its market is consolidating like this. This area can be called area of support, and this area can be called area of resistance. And for those traders who trade support and resistance, they will be expecting for price to do, for price to come back to this particular place so that they can buy. You get that they can buy, and that means they will most likely do it. They most likely put in their order at this particular place. You get putting in the buy limit of this place, and their stop loss will be around this particularly below this support level. While for those people who wants to sell, they will be likely to sell from this particular place because this is a level of resistance. And most likely, if they put their order in this place, their stop loss will be below here. You get. So what does liquidity do? So liquidity or market maker, financial institution, they will kind of manipulate this market, and instead of the market to simply come this particular place and just by trigger their order and go to the resistance place, what market will do is when market comes to this place, when market the price will so the price to like trigger, the price will go down and hit their stop loss, take out the market or liquidate them. The price will go up, liquidate people that want to sell this particular place when market is still moving in the same direction. So liquidity is what big financial institutions use in moving their market, their price you get. So for you to be able to spot liquidity zone, you should be looking at normal retail trading strategies. You get support and resistance, trend line. You get those are zones of liquidity zones. You get if you see anywhere where there is support or resistance, you know that those zones are liquidity zones. You get, and also trade line. If, for example, this is an uptrend, you get market is mixing of higher highs and higher low. And if you check this very well, you can see that at this particular place, this most likely is a trend line. According to trend line trading strategy, you should wait for what price to come back to this particular place to retest this trend line. Price come back to this particular trend line, you should be looking to buy. Because price will still go back up again. But what they will do is that once price comes back to this particular place, instead of price to buy normally, instead price will come back to this particular place, hit their stop loss before going in the same direction you get. So for you to be able to spot liquidity in the market, you're able to spot areas of equal highs and equal low, or support and resistance, you get equal highs, equal low, trend line liquidity, and the last one I'm talking about is called inducement. So for inducement, let's say you are an SMC trader, trade smart money concept. Yes, some smart money concept, you know that okay, in an uptrend, for example, once price consolidate in this particular region, then there will be an upward movement to the upper of this structure. probably market will now consolidate a little bit or create pieces of a before going up yet. So most times this equal low you see right here might be liquidity zone because this might be the actual zone that price or market will respect yet. Market will expect this to be the actual zone that causes the imbalance again. But we now kind of create some kind of consolidation at this particular place. We're thinking that this is the other block or the point of trade that you should take your trade. Also, for some traders, they might not be patient enough to wait for price to come back to this particular demand zone. So instead, they decide to take their trade at this particular place. And when they do, price will come, take them out of the trade before hitting the point of origin and going into these higher directions. So next is I'll be opening the chart to show you guys all of these things that I just explained. So guys, this is the first example, which is trend line liquidity. As you guys can see, this is actually a perfect trend line. You can see when price get to this place, price bounces upward. And when price get back to this place, price bounces upward. Get so for those trend line traders, we're waiting for price to come out of this place to take a buy again. As you can see, when price get to this, what happened? It broke down the trend line. Price started trending downward. So this is also another example. That's why most times you don't recommend trend line. You get, and also if a particular trend line be tested more than 3 times, means that trend line is weak. You get, because the more times, the more number of times that trend line is being tested, it becomes more weak. You get, if it is tested more times, multiple times, not that it's become weaker. At least 2 times is actually very good. 2 or 3 times, because it tested it 1, 2, 3, and the last time it touched here, it broke the structure to the down. So let me show you another example. So guys, this is another example, and for SMC traders, you should kind of familiar with this. So as you can see, there was a large impulse movement to the downside, which created break of structure, change of character, a break of structure to the downside. And you can see this was the candle that caused the structure to the downside. And on this page, you can also see another large impulsive movement. You get, so for most traders, you're going to mark out these two zones. You get, and most of them we would like to take that trade from this particular place. You can see if you decide to take a trade from this particular place, you can see that stop loss must have been hit. You can see price did what, price push below and kind of take their stop loss. Even if you try to take it from this particular place origin, you decide to extend it to become this week of this handle. Most likely your stop loss will also be hit. You get, so this is actually the main other block you get that cause these structures. So you'll be looking to actually sell from this place and not from this place. But if you are being patient enough, I'm thinking that this is actually what the zone that you should take a trade from, and this is what they call what in this mate. And if you also notice too, there's some kind of liquidity at this particular place. You will see this when you put this in 15 minutes time frame. You're going to see some kind of liquidity in this particular place. You can see how price clear all the liquidity it's in this particular place. So this is a major zone that price is going to hit in 1 hour time frame. But if you put this in the 15 minutes time frame, I'm going to see that. Let me just zoom this. I'm going to see that most people think that this is what the price is going to respect, but this is the major zone that price is going to respect. That's why doing top analysis is actually really very good. So if you have not watched my video on top analysis, you should really watch my video on top analysis. So guys, this is how you can identify the liquidity zone in the market. If you have any question, put down in the comment section. Don't forget to like and subscribe. I'll see my next video. Peace out.